Hello traders, in this video we're going to go over the results so far of my small cap market open day trading plan. We're now 50 trades into this plan and I'm going to show you the results, but I also want to explain what this is. So I've written a plan that's very specific to small cap stocks, which are notoriously volatile and unreliable, but also a favorite of new traders to trade. And they also often blow up their accounts trading those small cap stocks. So this allows you to take up to 100 trades, probably many more, and you're not going to blow up. You're not even going to damage your account. I can show you that right now. And we've been trading this plan for over 2 months and we've taken 50 trades. The way that we keep this safe and keep ourselves from blowing up the account is by trading one single share. So instead of tracking the P&L directly, like how much money we're making off the trades, because when you're trading one single share, it doesn't really make sense mathematically, the P&L. There's been some times during this test that we've been green. Right now we're red, but that's more of a cost of running the test, not so much a P&L. The way we track the P&L is by tracking how much of a return we have versus how much our losses based on a risk to reward ratio. So right now, this plan trades all or nothing 2R risk management. So that means that every single trade I take, the reward is twice the risk. So if I'm risking $5, the reward will be $10. I'm also tracking 3R, which will mean if I'm risking $5, the reward will be $15. And at the end, we'll know which one is better, because yes, obviously the 3R is going to give you a higher reward, but your win rate will be lower. But if it's high enough, it could give you a higher profit than the 2R. And that's what's happening so far. I'll go over those results right now. So just to give you an idea, the basic idea behind the plan is we take 3 trades maximum. The plan has written in it very specific criteria for picking stocks off the screener and how to take the entries. So you can see here that I'm tracking those 3 trades, and then I have some notes at the end. Just if I want to go back and see what happened during that trade, I write down some notes. So anyway, tracking all kinds of statistics, the ticker symbol, the session that we trade in, the setup, which is the same. We have to trade the exact same setup every time. Otherwise, the statistics are really meaningless. If we're trading multiple setups, we would need to track it on separate spreadsheets or at least separate them on the spreadsheet so that we know, okay, this setup works this amount of time or whatever. That's very difficult to do, especially when you're a new trader. So it's best just to try to come up with the setup that you think is going to be the most reliable, the safest, and the easiest to enter on, and just trade that. And that's what we're doing here. I have a video on the ABCD pattern if you're not familiar with what that is. And the other stuff that I'm tracking is the market cap. So far, I don't see any correlation between market cap and winning or losing, but I just thought that would be interesting to track. The range that we're trading is between $300 million and $2 billion market cap, and that is just the definition of a small cap stock. And other than that, I always track the entry versus the ideal entry, the stop and the exit, P&L, the cost. We're only trading one single share on every single trade. The ROI, that's the return on investment. The risk, that is that 1R that I was telling you about. Usually, so this would be ideal. That's based off of the ideal entry. The actual, that would be based off of our actual entry. And you can see that a lot of times they're the same or they're very close. The percent risk, so that we can see how consistent the risk is on every single one of these trades. You're going to see a few outliers, but it looks like most of them are around that same level of about, I would say, an average of about 2% risk. And then we're tracking whether or not the stock went to 2R or whether it went to 3R, that kind of a thing. So now, also we have our win percentage per day and our daily P&L, percent change of the account, 2R wins, 3R wins, that kind of thing. And this is what I have divided up my account into a day trading portion and a swing trading portion. And this is where we started, $679.88 at the beginning of this test 2 months ago. And this has cost us a little bit of money, but very little. We're down to $676.95. So that's a total cost of about $2.93. And this is the average win rate. Now, let me explain something here. With all or nothing 2R risk management, your break-even win rate is 33%. So anything better than 33% is profitable. If you can maintain even a 40% win rate, then after 10 trades, you would be up 2R. After 100 trades, you'd be up 20R. After 1,000 trades, you'd be up 200R. You get the idea. Same thing with 3R. You'd be up 3R, 30R, 300R, and respectively. So Right now, we're only up 3R. We had a bit of a rough week, and we only traded 2 days this week, Monday and Tuesday, because written in my trading plan, it tells me to take a week off of trading at 50 trades. So as of Tuesday, we completed 50 trades, and I just, over the entire time I've been trading, when I'm trading the same way every single day, if I take 50 trades, I'm pretty exhausted at that point, because you're doing everything the same day in and day out, and you're more likely to break your plan if you just try to keep it up and never stop and never give yourself a break. So I've written that into my trading plan to tell me to take a break, a week, 1 week break after every group of 50 trades, even though we're trying to get to 100 trades with this. So anyway, that's just something I've learned over my time trading. And you can see that last week, all of our trades were red. We took 4 trades and they all lost. So wiped out some of the profit from the plan so far, but we are still profitable. We're only up 3R, 3 times our risk at this point. If we were holding the 3R, we'd be up 8 times our risk, which is a lot better. And if we didn't make any error trades, which I believe we've only made 1 or 2, we would be up 4R right now, holding to 2R. So anyway, I think that so far this plan is a success because it's profitable, and that's the main thing. 90% of traders are unprofitable. So if you can have a profitable plan, that is really great, especially if it's something that you're able to trade the same way every single day. So yes, there is going to be some ebbs and flows. I think we were up 9R last week, and now we're down to the 3R. So hopefully things start to turn around. But either way, it doesn't really matter. What we're trying to do here is collect valuable data. We're trying to get to 100 trades, trading the exact same way every day, following a very specific plan. And at the end of that 100 trades, we'll know if either we're profitable or not, if holding the 2R or 3R is better. And if we're not profitable, we'll probably be able to pinpoint why. I mean, look over here at the statistics that I'm tracking with my entries. Trade number 1 only wins 27% of the time, basically, at this point. Trade number 2, or entry number 2, I should say, wins 50% of the time, and entry number 3 wins 60% of the time. So one possibility after 100 trades, if this trend continues, is we just get rid of our first entry. We just use that first entry as a signal. The exact same thing happened in my mid-cap test. The first entry ended up being a losing entry, but the second and third entry were winning entries. Remember, 33% is break even, so these are extremely high above break even. But even trade number 1, as low as it is, it would still be profitable if we've been holding to 3R in every trade, because break even for 3R is 25%. So yeah, just slightly profitable. It's still profitable. So anyway, that's where we are so far. Hopefully this information is helpful to you. The main message that I'm trying to get across with my videos is that all new traders, well, all traders period, but I mean, if you're a new trader, you might not know this, you need to have a plan going into every single trade, even if it's a very simple plan, if it's 1 or 2 lines, if it just tells you when to get in, when to get out, that kind of a thing, when to move your stop, whatever, just simple things. And you start following. That's really the first step at becoming a profitable trader. If you can't follow a plan, you'll never be profitable. If you can follow a plan, you may or may not be profitable, but you'll know that, hey, it's just because of my plan. My plan needs some work, and then maybe I will be profitable. And you just keep on revising the plan, but you need to take it out to 100 trades. You cannot be trading a plan for 5 trades or 10 trades and then deciding, hey, it's not profitable. At the beginning of this tracking, we weren't profitable for the first 2 or 3 weeks. After all these trades, we weren't profitable. I continued to trade the exact same way, didn't change one thing, and then this plan became profitable, and now it's kind of ebbing back toward break even, but it's still profitable even after these kind of rough couple of days of trading. So that's the point, is that you got to take this thing out long enough to have some statistical meaning. And 100 trades is a good number. There's something called the law of large numbers. If you don't know what that is, Google it and maybe you'll learn something. The coin toss is a great example. If we all know that a coin has a 50% probability of coming up heads or tails, but I bet you if you just grab a coin right now and you start flipping it, you're going to get 3 heads in a row, or 3 tails in a row, or 4 or 5 heads or tails in a row once in a while. And if you just isolate a certain number of tests, you're going to see a probability of 20% or something like that. But you know that because the coin only has 2 sides, it has a 50% probability of coming up heads or tails. Now, if you toss that coin 100 times, you're going to get very near to 50%. So that's the whole idea behind taking this thing out to 100 trades, is it will really show you the statistical results of the plan long term. So again, hopefully the video was helpful. If it was, hit the like button. If you haven't subscribed, do so. As always, go into every single trade with a plan and stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.